Welcome back to the Denny Matthews channel. Is Wall Street ruining the housing market? Over the last several months, there's been a lot of hype about Wall Street driving up the housing market. We've seen a few dozen headlines about how no one can buy houses because large institutional investors are buying up all the houses. Being natural-born skeptics, we wanted to see if this were actually true. Let's dig into the data and information to uncover what Wall Street's role is in today's red-hot housing market, as well as the risks Wall Street poses to both homebuyers and small-time investors in the long term. To do this, we looked at some data from Redfin, which shows that the share of homes that are purchased by investors is currently at 15.9%. For context, this is still a bit below where we were pre-pandemic, when investors were buying about 16.1% of all homes in the US. This provides a strong indication that investor activity is not leading to the surge in home prices. Nothing has really changed with respect to what percentage of homes are being purchased by investors. By all accounts, Wall Street investor activity is either lower than or at worst equal to smaller scale investor activity over the last decade. Another data point suggests that as of today, Wall Street's activity is not fueling this chaotic housing market. Instead, the housing market is being fueled by the fundamentals: extremely low inventory, growing demand from millennials entering the home buying age, and low interest rates. The current housing market is more a function of these three factors than it is the activity of institutional investors. However, that might be about to change. These institutional investors are not dominating the housing market yet, but they have some serious advantages over regular homebuyers or small-time investors like ourselves. And that has us concerned for what might happen in the coming years. So what to do about it? Should you just throw in the towel and buy stock in these giant companies? Who are the Wall Street investors? As we dive into this topic, let's first define who these Wall Street or institutional investors really are. The biggest of all companies is Invitation Homes, which, to no surprise, is an offshoot of BlackRock, the world's largest asset management company. Invitation Homes owns about 80,000 single-family residences across 16 markets in the US, which is undoubtedly huge. In fact, it's so huge that they are about 58% larger than one of their closest competitors, American Homes for Rent. But to keep this in perspective, there are about 16 million single-family rental homes in the US, and Invitation Homes owns about 0.5% of them. Although Invitation Homes is just one example, there are dozens of other companies out there like this. There are still good deals to be had, and if you're diligent and do your research, you should be able to find them. Like we stated earlier, interest rates are low, and long-term supply constraints and demographic trends indicate that the housing market is likely to show solid gains over the next decade, even if there happens to be a temporary slide in prices. Most importantly, don't forget, you have advantages too. Feel free to comment below if you have any questions. Thank you guys for watching, and we'll see you in the next video.